All right, let's get back to the regional banks and the impact of credit fears. Leslie Picker joins us right now with more. Hi again, Leslie. We're again trying to dig through what this all means and what the implications are.
Yeah, and just to point to some positive news, Becky, we're getting a slew of regional bank reports this morning after yesterday's volatility brought back those deja vus that you guys were talking about of 2023. The markets are acutely focused on credit quality and how these regional banks' loan books have performed in the quarter and their expectations for the future. The bank earnings are really providing a sigh of relief this morning. Truist guiding that its full-year net charge-off ratio was at the lower end of prior guidance. That's a positive sign for the health of its balance sheet. Shares there gaining this morning. You can see up 2.5%. Huntington also reporting better than expected guidance. Comerica and Fifth Third, which are merging, of course, also moving higher on their respective results as well. Now, these reports, of course, come as investors are really on edge about just the broader financial sector. Yesterday's sell-off was reminiscent of the spring of 2023, which saw several failures. The decline in the KRE, more than 6%, underperformed the IWM by 700 basis points on a two-day basis. That's the worst gap going back a decade, according to Barclays. Fears were sparked by Zions, which disclosed issues with a borrower that caused the bank to set aside more in provisions. Zions lost $1 billion in market cap yesterday after reporting a $50 million loss related to that alleged contractual default that it intends to fight in court. Western Alliance and Bank of California appear to be embroiled in a similar situation, although neither of them expect additional losses. Western Alliance says collateral will cover it. Bank of California has really minimal and pretty senior exposure to that, but it's definitely an area to watch as investors seem to need little excuse to press sell on regional banks, alternative asset managers, and more in this current environment, guys.